Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Taiwanese index is trading with gains of close to 2%. The Hang Seng trading with gains of 1.5%.
Donald Trump has said that a complete and total ceasefire between Israel and Iran will go into force.
The Nifty 25,222 is the resistance level, 25,170. Nifty Bank is up about 0.8% as well, I think.
25,200, we're managing to hold on to that, so it's a good take-up again. And broader and also doing well like yesterday.
July 9th is a tariff deadline. That is something that the markets will watch out for.
The domestic value addition criteria under PLI scheme may also be considered.
Our job is to provide as many avenues as possible.
15% duty as opposed to 100% duty that exists currently.
Well, the Nifty is holding comfortably above the 25,100 mark.
Good afternoon. Welcome to the last hour. What's been a very, very interesting trading session. We started with a bang. The markets have cooled down a little bit, but green is still very much the color. And can the bulls hold on to the day or not? We'll have the answer in the next 1 hour. This is Closing Bell. I'm Surabhi Upadhyay, and as always with me, Nigel D'Souza. Hi, Nigel.
And we're coming to you live from the CNBC-TV18 Motilal Oswal studio as well. Well, Surabhi, it's been a good trading session, till the last, I think, 90 minutes or so. And from there on, you've seen the markets give up some part of those gains, which is a little bit disappointing. The hope is in the next 60 minutes, there is some kind of a fight back. And hopefully, in fact, we can end with better than what the screen is indicating right now. The Nifty Bank actually has come off considerably. I think that 56,350, 56,400 mark, it's crucial that we close above those levels.
No, absolutely. Take your point. The thing is that a lot of the global markets are still trading with, a great amount of enthusiasm. Look at European indices right now. The German market almost 2% higher. The French market over 1%, and a quarter. Most of Europe stock 600 also over 1% higher. US futures are still up and about. They're pointing towards a solid start, 1% higher. So compared to this, global feel-good that we have, and oil prices, let's just pull up oil again. Brent continues to be below $70 a barrel. So the global backdrop is still okay, which is why, you can argue that the fact that we've kind of fizzled out on the momentum, started with a 250-point gain and now fizzling out at the headline index level, that doesn't look too great. But it's okay. Maybe markets just digesting the gains. The mid-caps are still doing better. And the watch point going forward, by the way, I've been saying that in the morning as well, that as some of the geopolitical headlines from West Asia settle, the focus is going to get back on trade and what's happening with the trade deals, etc. And that's where I think, a couple of issues which are up for debate with respect to the India-US trade deal. But having said that, I think mid-caps are still doing quite okay. So not too bad.
Well, that's right, Surabhi. But the crisscross lines as well, if they come up for you on the screen, they've gotten a little bit closer than what they were, say, a couple of hours or so ago. So we still have the breadth of the market. That is near three stocks advancing for one stock that's declining. But that's narrowed a wee bit. How do you position yourself, though, in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, what's your call? I think the call earlier this morning was buy the intraday dip. The intraday dip actually has been sharper than expected, I think so. But what's your view from here on the Nifty as well as on the Nifty Bank? Okay, all right. I think we'll get back to Mitesh in just a bit. We'll get that connection going. Is Mitesh back? All right, we'll try to reconnect with Mitesh in the next few minutes. But just quick check on the markets on a few stocks that are moving around, particularly the ones that have moved in this hour itself. GE Vernova, I think that stock, now it's up close to 5%. It's locked, I think so. So GE Vernova, I think we should get that stock up for you in the screen. IOL Chemicals, that's another name that's moved higher. It was already up, but now it's moved a wee bit higher in the last few minutes. I think we should get that stock as well up for you on the screen. But the story of the day has been the sharp downtick that we've seen in crude oil prices. The question is, how does this crude oil price correction impact the stock market? Sudarshan joins us to decode all of that for us. Sudarshan, tell us more.
So yesterday's high for Brent was $81 per barrel, and today it's trading below $69 per barrel, so a fall of more than almost $12 per barrel from yesterday's high. So how does it impact to our company? So basically, in layman term, it's positive for the users and negative for the companies which produce crude. So first, it's negative for upstream oil companies like ONGC and Oil India. So if there is a fall of $1 in crude price, it impacts in the range of rupees 300 to 400 crore to the annual revenue of these two companies. But in contrary, it's positive for OMCs, or say oil marketing companies like IOC, BPCL and HPCL. So a fall of $1 per barrel in the crude price impacts positively in the range of rupees 200 to 300 crore to the annual EBITDA of these OMCs. Now, apart from these oil and gas companies, fall in crude is also positive for those companies for which this crude is like input cost. For example, paint companies. For paint companies, up to 50% of their input costs are linked to crude. So if there is a fall in crude, it basically their raw material costs come down, and that has a positive impact on their margins. Lastly, fall in crude is positive for airline companies because for them, aviation turbine fuel is one of the major costs. So if there is a fall in crude, aviation turbine fuel cost also will come down. That's the reason you are seeing a divergent move in these stocks, while ONGC and Oil India are trading with cuts, and these paint companies, OMCs and airline companies are trading higher.
Okay, all right, got that. So crude indeed, the big headline of the day. Thanks very much for that, Sud. So those are, of course, the oil and gas names which are in focus. We've got Ashish Chaturmota joining us on the show this afternoon. He's, of course, from JM Financial. Ashish, great to have you on. I'm talking to you after a long time, so good to connect again on air. Let's start right there. I mean, oil and gas has been making all the headlines. Any specific, either tactical trades or any other sort of investment calls in this space, whether it's at the upstream side or the downstream side?
Hi, Subhi. Thanks for having me on this show. Definitely falling crude prices, obviously, there are some direct beneficiaries, but also if you look at in general, it's going to be very positive for the economy, which is 80-85% dependent on crude oil imports. And obviously, this is to do a lot with the inflation. Obviously, our retail inflation has hit a six-year low, which is close to 2.82. But rising crude prices could have changed the entire dynamics of inflation. But now, since crude prices have started correcting, this is going to be a further positive for India as an economy. Definitely from a tactical bets, obviously, the aviation space looks the most promising, bet in this, because if you look at, ETF prices, if they remain down or they remain low, then obviously the profitability of most of the aviation companies becomes in a significant manner, and particularly Indigo, which has got almost 60% market share in this segment, and adding a lot of more aircrafts obviously is going to see a bigger advantage of falling crude prices. So we have seen a structural leadership position which Indigo has maintained in the Indian market. And also if you look at from a world perspective, Indigo is now the third largest company in terms of airlines by its market capitalization, because of the increased profitability, low cost which it has maintained over a long period of time. And now crude oil correction will be a big positive. So yes, Indigo looks very, very interesting. From a technical perspective also, if you look at, the stock has been continuously making a higher structure and has been in a structural trend. So looks like it is going to move towards 6,000, 6,200 zone. As a disclosure, we may continue to hold this stock in our portfolio Apex PMS strategy as well.
All right. Hi, Ashish. So Interglobe is a stock that you like. What about hotels? Anything you like out there?
Yes, definitely, Nigel. So we think that ITC Hotels is a stock which looks very promising, because if you look at this company is also trying to do a lot of asset light model, and obviously 90% of the incremental capacity which ITC Hotels is bringing, it's on the asset light basis, which will ultimately lead to a 450-500 basis point jump in the margin profile of ITC Hotels. And if you look at from a valuation perspective, it is trading at 25 to 30% discount to its peers like Indian Hotels. So I think this discount is going to get narrower, and this will ultimately lead to a re-rating in ITC Hotels because of because of the valuation gap, and obviously because of the jump in margin expansion, which this company is going to witness because of asset-light business model. So we are expecting this stock to be somewhere close to 260, 270 is our broader target, which we have for ITC hotels, and we continue to hold this stock in our portfolios as well.
Got it. Okay, all right. Interglobe and ITC Hotels. Ashish likes both of them. Let's focus on a couple of other names, essentials that is. We have Page Industries and Nykaa. They're in focus. We have brokerage notes that are coming in there. Mangalam joins us to tell us about both these two names. Mangalam, tell us more.
Well, one makes you look good from the outside, one makes you feel good from the inside. That's what we said about Nykaa and Page Industries, right? So Nykaa is in focus because CLSA has initiated coverage. They have an outperform rating, a target price of 229 rupees. They say that the beauty market is good, and in that, Nykaa's market share is actually quite compelling. And add to that, they have potential to grow in high teens over the next 5 years as well. The only fly in the ointment is Nykaa Fashion, which has not grown as fast, and they believe that the differentiation here is very little given the crowded space and Nykaa's late entry out there. But they believe that the beauty business can continue to support the growth of this business so long as fashion drags limited. So you have growth and profitability for the beauty business, which will be key drivers, which would lead their EBITDA expansion by almost 310 basis points over the next 3 years. The other risk that they put on the table is slower than expected growth and faster scale-up of competition. Nykaa is lower in today's trading session because if you look at the last few days, the stock has been buzzing around. So maybe some bit of profit taking that's taking place out there. Page Industries, on the other hand, Goldman Sachs likes the company. They say that it's a buy and a target price of 52,000 rupees because they've done their analysis across all the listed players, and they believe that, the listed innerwear players have seen their inventory levels come down. So industry level inventory is normalized, which implies the next 5 years hold better growth prospects than the previous 5 years. For Page Industries, they expect about 12.2% CAGR in revenue. For perspective, the last 5 years, it grew at around 8%. So that's growth. And not just innerwear, you have outerwear doing well as well, which they believe will see consistent recovery and growth. And one of the drivers for outerwear segment will be the company adding nearly 200 to 250 exclusive brand outlets every year for the next 3 years. And it is in exclusive brand outlets while outerwear sells more than innerwear. And outerwear, of course, has a higher value and higher margins as well. So these factors working for Page Industries.
I don't think I could have ever drawn that connect between Page and Nykaa in that creative way.
I never said, what is what. I just said one makes you look good, one makes you feel good. You make
the inside and the outside. Very well put. I mean, absolute full credit to you, Mangalam.
Mangalam, I'm maintaining silence.
I'll keep quiet too.
All right. But Mangalam, all eyes on the test match as well. You think we have enough in the fuel tank? Bumrah is going to be leading the way. Can we knock the 10 wickets out?
For us to knock the 10 wickets out, you have to have some support coming in from Siraj and Prasidh Krishna as well, and maybe a couple of spinners getting a few wickets in, because Bumrah, all the heavy lifting that he's doing, his back is strong, but you want it to be supported by all the other muscles as well. So that's Bumrah leads from the front, but others have to support.
And I think we're teasing them with that target, right? It could look gettable if they go for it. Maybe, in fact, they'll make a mistake. And I know from all the years we've been working together, we're both optimists on Team India.
Always.
So let's hope by tomorrow we're celebrating this victory.
Let's hope that.
Thanks a lot for that, Mangalam. Ashish, you heard what Mangalam had to say with regard to feeling good, looking good, etc. But what's your view on both these two stocks, Page Industries and Nykaa? Do you like either of them? Would you stay away from them? What's your take?
Nigel, we are staying away from both these names. The reason being, if you look at Page Industries, it has been it used to be all-time favorite for the institutional money. But if you look at the current data, clearly at 60 trailing PE multiple, this stock looks little expensive for the kind of growth which it is witnessing. So if you look at the top line growth, it's in the range of 8%. The profitability growth is hardly 10 to 11% for last 3 year CAGR. So with this kind of growth, if you give a very high PE multiple in an environment where a lot of competitive intensity is coming in, it looks little difficult, for us to get a clarity about what kind of PE multiple re-rating or EPS expansion is going to take place. So we would like to stay away from the name at this point of time. So Page Industries is an avoid. As far as Nykaa is concerned, I think in the new age businesses, we are more comfortable with players like Eternal or even Swiggy, where at least we know that the burn on the dark stores has been coming down. In this quarter, we have seen a significant drop in the dark store additions. So this will ultimately lead to strong EBITDA margin and margin expansion. At least profitability is visible in next 3 to 4 quarters. So my sense is, if you want to really play the new age businesses, then I think players like Eternal and Swiggy looks more interesting.
Okay, so Eternal and Swiggy, when it comes to new age businesses, got that, Ashish. By the way, speaking of some more stocks in news today, let's pull up KPIT Tech. Now, KPIT Tech has been sounding cautious on its business. It did a mid-quarter update, and that update is not too promising. Stocks down 6%. Basically, they're saying that deal closures are taking time, ramp-ups are also getting delayed. So not sounding too impressive, and therefore the street has taken a cautious view on it. I don't know if you caught this or not, Ashish. Any interest in KPIT Tech? Anything else? I mean, overall also gives a view on IT if you're advising a buy on anything.
So overall, discretionary IT spending is in a trouble zone, Surabhi, because if you look at the global macro environment is still not very conducive. We are not sure about the global growth. Obviously, this will put a lot of pressure on the corporate spending, particularly on the discretionary IT spending. So this will make sure that IT as a sector might underperform. There would be outliers, maybe stocks like OFSS, which is a proxy to the cloud transformation, could be a good play, or maybe a player like Persistent or Coforge, which are playing heavily on the BFSI segment. So at least these BFSI is a segment which is doing very well. So maybe these are the players which might do better than the peers. But overall, IT as a sector looks a little nervous, and particularly the ER&D players, because we have not seen meaningful guidance coming from the OEMs across the globe. So I think maybe it will take some time. So at least in the medium term, we are not very hopeful about ER&D stocks seeing recovery, and particularly stocks like KPIT, Tata Elxsi, they might continue to remain in a range.
Got it. All right. I wanted your view actually on the telecom space because Vodafone Idea, that stock is higher in today's trading session. This after Communication Minister Jyotiraditya Scindia had spoken out against duopoly in the telecom sector as the company's struggles continue. Let's listen in to what he had to say, and then we go to Ashish for his view.
Today we have fiber, we have broadband, we have Wi-Fi, we have mobile, and soon enough we will also have satellite. Our job is to provide as many avenues as possible, and within each vertical as well, provide intense competition. It's not good enough having a duopoly or one carrier or two carriers. You must have competition in every sector. India today is probably the only country in the world with 4 telcos.
Ashish, what do you factor in? The minister clearly says doesn't want a duopoly, so that would be good, some hope actually for Vodafone shareholders as well. What do you think? You have, the appetite enough, risk reward with Vodafone at around this 7 rupees odd, or will you stick to the large names, Bharti Airtel, Reliance Industries? Your take.
So Nigel, definitely we would stick to the quality names where the proven track record is there, and we know that the incremental journey is we are going to witness almost the ARPUs going up. So this will ultimately benefit not just Reliance or Bharti, even including the entire sector. But it's not about just ARPUs; it is about the market share gain due to different services which one is going to launch. And obviously, we believe that both Reliance and Bharti are in a position to have this kind of leadership position in not just the telecom, but also into the other services. And that's the reason we believe that we would like to be overweight on stocks like Bharti Airtel, where at least we have a very clear focus about ARPUs going up, and there's a market share gain which is continuously happening. So our top pick in the space would be Bharti Airtel. But yes, this is not just today. We have been witnessing this trend where we don't want to have just two players, and that's the reason a lot of support being given to Vodafone, and even there's a lot of focus on BSNL to revamp BSNL. But eventually it's about the market share gain, and that's where we believe Bharti will take the lead.
Okay. All right. So that's a view on telecom stocks. Ashish, you give us some ideas when we've been throwing a lot of stocks and newsmakers at you, but it's an interesting market. I mean, even today, as I look at it, we started with such a flourish. It was the perfect day, but the index is not able to punch through the 25,200 kind of zone. What's the sense overall on the market? And, give us some ideas, because mid-caps are still doing okay.
So, Subhi, we are still very positive about market. Yes, we have seen some kind of intraday dip coming into the market, but eventually, we have to witness that, in the last 3-4 months, despite in India-Pakistan war, Iran-Israel or crude prices going up. Despite all this, we have not seen nervousness in the Indian markets. And also, if you look at the stability which rupee is providing, it gives a clear signal that markets are in a very strong hands, and we continue to have a positive view. Now, as far as sectors and individual bets are concerned, we believe that the entire financialization of savings as a theme would do very well. Since if the interest rates are going to come down, a lot of money is going to get into the financialization of savings, and we believe there are direct and indirect proxy to play this. So KFin Technologies is one play which we currently like because of its a kind of very strong leadership position. So KFin Technologies is something where we believe that a good 20-25% upside could not be ruled out from current levels. So this is one stock within the capital markets theme. MCX is one theme which we really like because we believe that hedging and gold, silver, these are going to be in a very strong uptrend. So there is going to be a lot of trading volume activity which is going to happen at this commodity boost. So I think MCX will continue to do well, and now electricity derivatives are being introduced in MCX. So this is again a good, I would say, optionality for MCX to get re-rated. This is one space we like. Individually, we like CDMO as an opportunity because we believe that if the overall pharma space is going to grow at 7-8%, then CDMO has a potential to grow at 17-18%. And within that, Laurus Labs is one stock which looks very promising, where a lot of capex has been done in the last 3-4 years. And I think going forward, we are going to see this asset turnover going to improve for a company like Laurus Labs. Technically, this is a 3-year consolidation breakout which is happening. So all this clearly indicates there is a decent upside which could be seen in stocks like Laurus Labs.
Got it. Okay. All right. Thanks a lot, Ashish, for joining in and filling us in with your take on all the stocks we discussed. Looking forward to having a chat with you rather soon. Tata Motors JLR, that's in focus because on Bloomberg, reports suggest that JLR will hike prices in a calibrated manner post the US tariff impact. So that's some news flow that's coming in there. For the time being, stock more or less unmoved. It's sitting with a gain of close to around 0.5% or thereabouts. Keep an eye out on the bottom of your screen. Let's slip into a short break. We'll be back. Deepak Shenoy from Capital Mind will be joining in to give us his view on the markets and stocks and themes that he likes. Welcome back. Well, the Nifty actually is just holding on to those gains of 60, 70 points. Very, very meager gains in comparison to what we saw earlier today. A few stocks have come off the top. Eternal, that's had a good run of late. That's come in for some profit taking. I think we should pull up a couple of more names. You pull up Nestle. That as well has seen some kind of profit taking in the last few minutes. I think the intraday chart will come up for you. And tech seems to be a little bit nervous post Accenture's commentary with regard to the next year. So I think HCL Tech is another one that's moved a little bit lower. The tech index itself had bounced back today, but that as well has come in for some profit taking. But the IPO market is buzzing. Now we have Mumbai real estate player Kalpataru that's eyeing D Street. Ria joins in to tell us the money they're raising, why they're raising it, and how the peers as well stacked up. Ria, take it away.
Well, yes, Nigel, the issue for Kalpataru Limited opens today. As you said, they're a real estate developer based in Mumbai, largely present in the MMR market as well as key micro markets across MMR and some other regions, including Noida and Bangalore as well. Now, in terms of what the money is going to be used for, they're going to raise rupees 1,590 crores. This is via a 100% fresh issue, and out of this, rupees 1,193 crores will be used for debt repayment, which is expected to result in interest cost savings of about rupees 100 to 120 crores. Now, so far, the company has raised 708 crores from 9 marquee investors at the upper end of the price band, which is rupees 414 crores. And some of the investors include GIC Singapore as well as Bain Capital. Now, taking a look at the operational performance of the company, as of the end of the December quarter of FY25, the pre-sales stand at about rupees 2,727 crores. Collections also about rupees 2,620 odd crores. In terms of the pipeline for the ongoing and the forthcoming projects, they have 25 projects with an area of around 25 million square feet. In terms of valuations, the chart will come up for you on the screen. Kalpataru falls in the higher end compared to its peers, trading at a price to book value of 5.67 times.
Okay, so valuations right up there. That's the important one. Thanks, Ria, for the perspective. We did catch up with the management of Kalpataru as they're coming to the market, try to figure out, how much of that interest cost saving the company will make and what their immediate plans are with respect to expansion. Take a look.
The net debt in the books as of December, which is the reported accounts in the financials, is around 11,000 crores. When the debt is utilized for the underlying projects which are throwing cash flows, which we typically call it as ongoing projects, which we have 2.5 crore square feet, out of which we will be actually delivering around 1 crore square feet, 11 projects in FY26 and FY27 together.
All right, that's Kalpataru, another key, very well-known brand, of course, for those of us who live in Mumbai MMR, coming to the market. Deepak Shenoy, founder of Capital Mind, is with us. Deepak, great to have you on. Thank you so much for joining in. So I'm going to start right there. Real estate, it's a hot market. Prices are still high. Most developers we speak to, whether it's Bengaluru, whether it's Mumbai, everyone sounds very optimistic. What do you think of the sector? I don't know if you have any individual thoughts on Kalpataru, but just give us your overall view.
Yes, there will be no individual thoughts on the stocks, but I think overall, see, in the past, there's been this big problem of, real estate seems to make money, but none of the real estate companies seem to be able to generate a profit. And they've been not so great in terms of asset allocation even allocation metrics for their own cash, because when they generate the profits, they go and plow it into land that's possibly usable only 8 or 9 years later. So the long cycle of where cash flows are stuck for a long time. So it doesn't necessarily compound your ROE meaningfully over a period of time. So your overall thing is also that because of the new Ind AS standards, they don't really report, their cash flows are completely different from reported accounts. So in that sense, there should be a fairly large difference between what you see on the balance sheets and the profit and loss statements versus what actually happens in cash flow, and therefore a lot of it is on conversations with the management or their conference calls and so on. So to that extent, it's much more difficult to analyze the sector now with the accounting changes, and traditionally it's been a bad asset allocator from a cash flow perspective. So we've not been majorly keen on a large amount of this this part of the sector, but I think going forward there will be pockets, especially in non-tier 1 cities, non-tier 1, maybe not even non-tier, in tier 3 and below cities, where the upgrade requirement starts to come in as money starts to flow across the sector. So maybe the players in those areas will start to see some kind of a movement back, as long as they're trustworthy management. And that's where the interest might lie going forward. However, real estate is overpriced in India by a very large extent. So to the extent that it was an investable asset, I think a large amount of your returns happen primarily on gains from increasing prices. And we've had about a 4 or 5 year increasing cycle since COVID. But before that, we had an 8 or 9 period of times when prices were stagnant. If we get into a stage when prices start going negative or it just stagnate for a while, the tier 1, tier 2 cities are definitely going to see a slowdown in terms of demand, especially investing demand. But that's why I think the smaller players in smaller cities or players in smaller cities will be more attractive.
Okay, so real estate players, perhaps in smaller cities, would be the ones to look at. At least that's the way you're looking at it. That give us a minute. Deepak, will come back to you, and we want to get the ramifications of this for the Indian auto space. Now, this is a story, and this is a story that our colleague Parikshit is picking up, that, of course, we know that India wants, the auto industry to make in India, especially when it comes to EVs. And there seems to be a new scheme that's being floated. But it appears that the Chinese in particular may not entirely be welcome. I think I've oversimplified it perhaps, but let's go across to Parikshit, who's picking up these details. Parikshit, what's the latest on this? What's happening?
Well, the government today has formally opened up the application portal for the scheme for promotion of manufacturing electric cars in India. Now, this was a scheme that had been launched over a year ago with much fanfare, especially for companies like Tesla. Now, Tesla is not looking to manufacture in India, but the government believes there is interest from at least 4 to 5 Korean and European OEMs. But there will also be some guidelines as far as who can apply. While the government is inviting all OEMs and all nations drawing their attention to the scheme, they're saying that countries which have a land border with India, they have not been sent invites for this scheme. And this includes China. So in a way, the government is following Press Note 3, which had said that investments from countries bordering India or having a land border in India will not come into India automatically, and they will have to go through government approval. We've been seeing over the past few years how Chinese investments have slowed down. They are only approved on a case-by-case cases. There is no automatic approval. So therefore, the government following that policy is saying that we're not inviting countries which have a land border, and this includes China as well. But overall, the guidelines remain the same. 8,000 CBUs per year at a reduced duty of 15% compared to 100% currently. And you have to make an investment commitment of 4,150 crores over a 5-year period.
Parikshit, just a quick follow-up. Does this in any way impact BYD's current operations in India? They're already making in India, right? And we see all these BYD cars on the road. So any takeaway or implications there?
Well, as of now, BYD is importing some of the high-end cars into India. They have very small, limited assembly operations that are taking place currently. Are they going to expand their operations after this? What's going to be the outlook? That remains to be seen. But we have seen BYD cars picking up a lot in the fleet segment especially. But going by the guidelines that have been set out by the government and the kind of tone and tenor of the press conference today, it seems that Chinese will not be allowed to apply for this scheme over the next 4 months. You will have US car makers who will be invited, European car makers, Korean, Japanese, but we will not possibly see any applications from Chinese OEMs. But that also means they can come in through JV routes. So from tomorrow, just for example, like MG Motor. MG Motor has a joint venture with JSW Group. That was cleared by Competition Commission of India, but they've not been given approval for foreign direct investment because China is, again, a country bordering India, and Chinese investments are not allowed through the automatic route. So that FDI application is pending. So it's quite possible that China and BYD companies and other Chinese companies may want to enter India through the JV route, but their applications will be scrutinized by the government, and it's not very clear whether they will be approved either.
All right. Okay. Important story, Parikshit. Thank you very much for explaining that to us. Now let's discuss this with Deepak. Deepak, implications for the listed companies. I mean, it's clearly M&M, which has been the poster child when it comes to auto stocks that have done well. But with the Chinese being kind of being given a gentle pushback, and Tesla anyway doesn't want to make in India. I mean, implications for the auto space. What do you like? What would you buy? Avoid? What's the approach?
So I think, Subi, this is I think it was 2020 odd when we created that press note 3 with Chinese investments into India anyways. So they can, for instance, they can make their cars and sell them to India. They can't manufacture in India because they can't invest in equity in an Indian company. Could do a joint venture, government to own equity. I think at some level the government should allow us minority stake, but it's not clear that the government wants to allow it. Having said that, I think the problem is they have the best technology right now, and they also have a large amount of these rare earths which are used to make motors for these cars, sensors as well. And then I think you have dependence on understanding how to manufacture it, especially if you look at their cars. So we're not going to get that technology transfer. Even if we allowed them, they would be very low, because they've done this to the US, where the US companies came to them, gave them their technology, said, make it for us. They learned from them, and then they built their own cars. They're not going to come to India and say, well, now the Indians are going to learn from the Chinese and then make their own cars. They're demonstrating this in every industry where we have GVs. They do not like any technology to be transferred to India. So to the extent, not allowing them is not a bad idea, because if you're not going to benefit from the technology transfer, why bother anyways? It may help in some other countries, other manufacturers in Europe, perhaps Japan and other, to help them set up EV-based manufacturing plants in India. The idea should be that Indian residents and citizens should be able to get the technology transfer so we can develop our own cars in the future, and not be to not be completely dependent on another country, especially where there are political motives to stop doing that technology transfer. And then if tomorrow you're dependent on their cars and they've become a massive part of your transportation, that they could stop because of politics. I think it's fair that India is going down this route. I don't think it's beneficial for companies. They will not be able to do JVs right now with Chinese companies, but I think they will be JVs with other countries to set up plans.
Okay. Slightly scratchy line with Deepak today, so we'll make it a shorter chat. Deepak, thanks very much for joining in. We'll have a longer conversation more on the markets next time we catch up. But for now, we'll take a very quick break. Come back on the other side, and of course, the top trading calls for the last half hour coming up with Mitesh.
This is a global reset. This is
Welcome back. Well, let's get Mitesh Thakkar back on the show. Mitesh, what are your buy or sell calls that you have today? It's actually been a bit of a disappointing trading session going by where we started off. Your take?
So, Nigel, that's right. Time and again, the Nifty is trying to break, make a fresh high, and then the momentum doesn't support it, and the index kind of comes down. So, I think the good thing is that it's not turning negative, but I think it's not a very positive sign that you are facing supply at higher levels despite good news and the global market is doing well. But for the time being, I think I'll go with the BTST on Kotak Bank, keep a stop below 22.09, look for a target of 22.50 for tomorrow. And take one STBT that's on Lupin with a stop at around 1937.5 for target of 1915.
Okay. All right. Got that, Mitesh. Thanks very much for that. So, yeah, indeed, losing that momentum as we're entering the last leg of trade. We were just discussing KPIT Tech with our guests earlier on the show. The stock continues to be under pressure. It's been down 5-6% right through the trading session. This following a weak business update. Let's go across to Vinny to just revise what exactly the company is telling investors now. Vinny?
Hi, afternoon. So yes, a weak business update is what the company has given. This is a mid-quarter update. Business environment they're highlighting is uncertain given the geopolitical tensions as well as tariffs. There's no certainty on that front. Deal pipelines, that continues to be strong. But the problem comes in why? Because there's a conversion delay or slowdown in terms of conversion that is there. Other than that, ramp up in terms of wins, that is there again. But the way it's progressing in terms of how the pace at which it should progress is slower than expected. Other than that, demand trends from Europe is good, but the problem comes in US as well as Asia. Again, there's some bit of an uncertainty here in terms of demand trends. So all these are some of these factors that are causing a bit of a problem for KPIT Tech, and that is why Q1 in terms of profitability, the company also said that there wouldn't be any one-time gain, so that would be an impact. Other than that, there is going to be some bit of a problem coming in foreign exchange rates. There's a lot of fluctuation and volatility in forex rate that will cause some bit of a problem for other income as well. On the back of this, Kotak Institutional Equities has cut their FY26 to 28 estimate of earnings by 3 to 4%, sell rating target price of 1,000 rupees. Now, JP Morgan also is maintaining their overweight rating. Target price is 1,500 rupees per share. But they too have cut their organic growth by 4% for FY26 and also cut the FY26 to FY28 CAGR growth by 2% to 14.5% is now the expectation coming in here. So clearly, even analysts are not too happy with this update that is coming here.
Got it. All right. Thanks a lot for that, Vinny. Well, the deadline to submit bids for Jayaprakash Associates, that ends today. Banks are expected a handful of candidates to take over the insolvent company. We have Ritu who's joining us to fill us in with details on that front. Ritu?
Well, yes, the deadline to submit bids for Jayaprakash Associates under the bankruptcy process ends today, and this one is being watched very closely. There is a massive amount of debt that is at stake, and while the deadline has already been extended before, banks are now hoping that at least a few serious bidders will step up. We had reported earlier that as many as 25 entities had submitted expressions of interest to acquire JP Associates under IBC, and the list includes some big corporate names like Adani Enterprises, Dalmia Cement, Jindal India Power, Oberoi Realty, Patanjali Ayurveda, Torrent Power and Vedanta, just to name a few. And apart from corporates, a number of financial players and asset reconstruction companies had also shown interest. So names like Autham Investment, Oak Tree, JC Flowers ARC, Kotak Alternate Asset Managers, and so on. Now, the window to submit the final bids closes tonight, and the bids are expected to be opened by the lenders in their meeting tomorrow. Now, Jayaprakash Associates, as you know, is the flagship company of the JP Group. It has presence across real estate, hospitality, cement, engineering, construction, and others, and it was among the list of companies that was identified by RBI to be sent to the Insolvency and Bankruptcy Court back in 2017, and after a long, winded process, it was formally admitted to the Bankruptcy Court just last year. The company is facing claims of more than 57,000 crore rupees, and now all eyes are going to be on how this bidding war plays out, especially with such high-profile names in the mix.
Okay. All right, Ritu. Thanks very much for that. Well, let's move on and get you some global perspective now. This is coming in from our colleague Prashant, who spoke with Richard Redoglia, CEO of Matrix Global, about the downside in oil prices. Richard says this is the biggest global reset in energy that he has seen in recent times. Take a look.
This is a global reset. This could be one of the largest global resets I think I've seen in a very, very long time, at least in my life in the energy markets, because if it's possible to bring Iran into the fold, if it's even possible, I'm not sure if it is or not, but if you could bring a theocratic government and have it become peaceful, that's a sea change, right? That means less military spending. That means more trade. It probably means more positive economic activity. I had mentioned, you and I talked just briefly, Syria has been recognized by the U.S. government. Trump has recognized Syria. And I just saw a thing on another station, and it had a person walking around Syria, and all through Syria were signs of Syrians thanking Donald Trump. Now, if someone said to me 2 years or 6 months ago that there are going to be signs in Syria thanking Donald Trump, remember Syria was a backer of Iran, you would have thought you're crazy. But when you change the dynamics that we've experienced here, I think it's something that your title of your show is exactly right. This could be a major global reset.
A major global reset in the times that we're living in. You can catch more of that interview on CNBC-TV18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian business, giving you unparalleled insights. You can tune in to Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and 8:30 p.m. for Global Lens. Okay, with that, let's move on to another important story. This one's coming in from the pharma sector. Danish pharma giant Novo Nordisk has launched its blockbuster obesity drug Wegovy in India. The company has launched the drug in 5 strengths, with treatment prices starting at about 17,000 rupees a month, going all the way up to 26,000 rupees per month. Let's hear out what the management had to tell us about this important launch.
Is Wegovy going to be imported into the Indian market, or is there any kind of local manufacturing?
Yeah. You are absolutely. No,
so there's no local manufacturing right now?
We are going to import No, right now we don't have plans for any local manufacturing. We have actually invested more than $20 billion in terms of APIs as well as fill and finish. And I think we have economy of scale to really produce for the world. And we will be currently importing it from headquarters. I think, while some of the players talk about the collaboration now, we have had collaborations for more than 3 decades for manufacturing as well as for distribution, which is with Abbott distribution. Now, this is something which we know, but we also know at this point of a time that we are one of the strongest player when it comes to metabolic diseases. And we have really done the justice when it comes to insulin, when we have launched the oral semaglutide. So at this point of a time, we will be launching ourselves. But should there be a need in future, I think there is never say no, and we will evaluate the scenario and see if there is a chance to join the partnership.
Okay, all right. Well, time to slip into a short break. Then when you come back, we'll have Jay Bal of Catch the Chaos who will be joining in to help us out with how he sees the market panning out. Don't go anywhere. Welcome back. As promised, Jay Bala of Cash the Kiosk joins us on the show. Hi, Jay. Good afternoon. Good to see you. Who's going to win the test today?
Bulls.
Huh?
The Bulls.
All right, let's talk about the markets then. I believe that that you're calling a near-term bottom, and you believe that that price correction is mostly done. We're going to head higher from here.
That's right, Nigel. See, the market's low on Friday the 13th. It is probably ominous for the bears. I already highlighted the possibility last week, and it looks like with today's high of about 25,300 and change, the markets have registered a low at 24,750 and change. So I think the markets are, like I pointed out 2 weeks ago, there's a good possibility that the market could accelerate higher and to record highs by the end of July or maybe earlier. I would have been happier had the market were able to hold on to the gains somewhere around about 25,200 and 25,300. Around that range, if the close had been there, it would have been far more convincing. But no damage done. That would have eliminated the other possibility of the markets going one more time to the slightly below the June low. In either case, the markets are still headed higher from a 6 to 12 months perspective. As I've been pointing out, I still maintain 29,000 on the Nifty from a 6 to 12 months perspective.
29,000, what a big change, right, Jay? I recall maybe 12 months ago, you were talking about 21,000, which we almost got there. And then from now, you've changed that stance. 6 to 12 months, we could be at 29,000. The bulls will be, buying the pedas and hoping to give it to you because otherwise they were quite annoyed to hear you being very bearish. Got that. But that's what's showing you on the charts. And also with regard to India and England, we got the bulls are going to be winning this contest that's going on. Bulls beat the bears, but India beats England today?
Yeah, I hope so.
Okay, got it. All right. Let's focus on the Nifty Bank. That's going to be the one that needs to drive higher, right? To take the Nifty higher. Where is that index headed? And also SBI, it's gone through a big time correction, actually. Your take?
Yeah, the problem market has been, the lack of firepower from SBI. And if SBI manages to take out 835, then that will give an impetus for the banking sector because ICICI and HDFC Bank have done their jobs. But interestingly, from the PSU space, Bank of Baroda and Punjab National Bank are looking interesting more than SBI. SBI's structure from the April-March low isn't that encouraging. So that's the reason I'm waiting for 835 to get crossed. But these are not heavyweights like SBI. So yeah, we need SBI for the banking index to perform well. The resistance comes at about 58,500, 58,900. For that, definitely, SBI shouldn't fall, and maybe a little bit of help from HDFC Bank will be welcome.
Okay, so that's a take on the financials. Jay, hi. So since you're retaining your bullish perspective, 6 to 12 months, 29,000 Nifty, what else apart from financials? I mean, what else is looking good? Reliance was showing a little bit of promise, a couple of days back. Today it's a little down. But where else should we be looking in the large cap space at least?
Yeah, you have to maintain focus on capital goods, autos, and probably real estate. They are doing quite well. If you look at the price structure for these three sectors, if they were to cross the June high, I think the high was on the 14th or 16th of June. I think that once that's crossed, the markets will automatically rally much higher, and these are bound to rally quite well. But the problem pocket has been IT sector. IT sector, needs it can be interpreted both ways. It's a bit ambivalent. I want TCS to cross 3550. If that manages to do it, I think most of the or even the little bit of niggling worries that have for the markets, those will disappear. And so, so when to your pointed question of large caps, I think capital goods, real estate will continue to do well, and cement space also likely to do well. And I have two calls today, one from the mid-cap space, one is Cummins, again from the capital goods space. It's had a nice pullback, stop loss at about 29.72, and I'm expecting it to reach 52-week highs past 4,100. And Hindustan Copper is a short-term call. It should not print 230, not closing basis. It should not print 230. As long as it managed to do that, there's a short-term bump up potential for about 305.
Okay.
Got it. All right, Jay, I wanted your call on gold as well as crude. Both those two assets are quite interesting. Crude didn't run away the way it should have, or the way the market would have thought it would, post this geopolitical issue that played out. Where do you see that one headed now that it's cooled off so much? And gold actually hasn't rebounded in that sort of a manner. Some were calling for 3,500 sooner rather than later. That didn't happen. But is the structure still positive?
No, see, I've been calling for silver to outperform gold in the short term, and that's done. I think even that has come to an end. 37.5 was my price objective, and on London fixing of silver. I came very close to it. I think the decline from there is looking like start of a reversal for silver, and outperformance is probably done. And if gold were to drop below 32.45 on the London fixing, I'm anticipating both gold and silver to correct quite sharply. Silver to about $28, gold to about $2,700. But that will be a medium-term buying opportunity. But the short to medium term, we're likely to see the precious metals head lower. When it comes to crude, fundamentals were calling for $120 if the Strait of Hormuz were closed. But I had called an aggressive short call on both the crude varieties last week, and it's dropped 10% from yesterday's high. So it's a bull trap, and I'm anticipating Brent to go back towards $55 that it registered in April, and then it will probably begin a major uptrend that lasts about 1 to 2 years.
Okay, all right. Good talking as always, Jay. Thanks so much for joining in and giving us that perspective. Well, we're down to the last 2 minutes of trade, so let's quickly look at the final rates that are coming in. There's been a bit of a pullback on the Nifty. So since we're complaining so much about it being a bit of a damn squib day, maybe the index decided to oblige us because we've got at least 100 on the board. Nigel's been looking out for all the centuries in the test match. So, well, you've got 100.
I don't want to see any centuries today.
As of now, yeah, you don't want to see this time around.
Yeah, I want to see wickets go.
Absolutely. But what we have is 100 points on the Nifty. So let's talk about the winners first. The leaders of the up move today: Jio Finance, Shriram Finance. There's Adani Ports that's managed a 3% up move. Banks have done pretty okay, actually. The Bank Nifty has outperformed the Nifty with a gain of almost 0.8%. Kotak Mahindra Bank, HDFC Bank, Axis Bank, even SBI, all of them contributing on the way up. L&T is the one stock from the large cap space that's contributed on the upside as well. And then you have, in between some of the metal names, Hindalco, JSW Steel, because it's a global risk on. Some of the metal stocks did well as well. On the flip side, with a 10% drop in crude oil prices, ONGC is down 3%. Cool off in a lot of the IT names. They could not sustain their mojo. So HCL Tech, Tech Mahindra, Infosys. The IT stocks pretty much sold off, explained how the Nifty cooled off as well. But Nigel, not too bad for mid-caps today.
Well, there were some stocks that were absolutely on fire. You pull up Bajaj Consumer, the stock was up 20%. The street is sensing some kind of development out there. Invero Infra, that was up close to 11%. JM Financial, up 7.5% in today's trading session. From the Lloyd group of companies, you had Lloyd Enterprises, a stock we don't talk about very often, but now it's more than $1 billion in terms of market cap. That one, in fact, was up close to around 7.5%. And, post what happened with Lloyd Metal, the street seems to be turning its attention to the other smaller Lloyd Group companies like Lloyd Enterprises, as well as, the other smaller one as well, Lloyd Engineering, I think so. Well, a few more stocks that did well, the OMCs, HPCL, SAIL, Sagility, all of them moved higher on very, very large volumes in trade today. So that was the market for you. A good start to trade, we couldn't build on, and maybe a bit of a disappointing close, though the Nifty goes home with a gain of around 100 points. The Nifty Bank, though, quite rock solid, up close to around 400 points. But the big money was made in the broader markets as the number of stocks advancing were way more than the number of stocks that were declining. We'll wrap up on this edition of Closing Bell. Stay with us, though. Markets Forward comes up next.